Okay, everyone, welcome to another episode. I think it is number 9 of Modern Slackers, the 5 modern pillars to success. Today, we are talking about our fans' favorite fucking topic, which is crypto. And I play devil's advocate. And Dylan, go ahead and introduce yourself. I don't even think you need to at this point.
Yeah, no, thanks, John, for having me on. So I guess I'm the crypto nerd.
Yes.
Basically, I run a couple businesses. One helping crypto experts turn their knowledge into a sustainable and scalable consulting business in the space, because education in the space is essential. So hopefully you get some good education today on crypto and what it is, what about it, and hopefully
Yeah.
John plays a good devil's advocate there. And I also have a little foundational course for people who want to learn and want to build a foundation, because that's one of the key things I always go back to is always build your foundation first, especially in a new area, rather than just like diving in and going YOLO. You know, maybe you can work out for you all right, but I think it's always important to have that foundation, the fundamentals, and then build from there.
Okay, and here's a good example. I lost $250,000 in 1 year because I
Yep.
didn't build the fundamentals. So
Yeah.
I notoriously hate crypto, but I actually
Yep.
opened a Swan account and dumped 350,000 into it. So I did that for you, Dylan. That was
All
my
right.
gift to
Well,
my
I hope
gift
not just for
to
me,
vote.
but you,
You
you
know,
actually,
I lost some money, and I was like,
I
you know
mean,
what?
in the short
I'm
term,
not, I'm not,
term,
yeah, I'm not looking at it, and I think that's where people, speculators, are coming in really hardcore, and they're just. So I pulled up this Forbes article, and I have some
yeah.
key takeaways. So this is kind of
Okay.
just some rapid fire. Forbes, their title was "Why You Should Not Invest into Crypto." So this is where I think you're gonna have a lot to say. So
Yeah.
the first one is Bitcoin is still incredibly volatile.
Okay.
Volatile. So what
That's
is
a,
your response to that?
it is volatile,
Okay.
just like you experienced. And so that's why the fundamentals are so important, and understanding what it is, why it's important, and how it fits into your own personal investing strategy.
Let's talk
So
about those fundamentals a little bit. Let's
yeah,
bring
it's
those
just
up.
so one of the fundamentals that makes Bitcoin so volatile is it's been around 13 years. Um, it's a growing asset class. It's growing faster than the internet was in 1997, double the pace. So without
These are
200,
facts.
yeah, so you can look them up. You know, just keep them as ranges. Always do your own research on this, but at about 200 to 300 million users worldwide for crypto, Bitcoin's kind of 100 to 200 or so. It's growing double the speed of the internet was in 1997. And we see how big and how important the internet is today. So when you get something that's growing that fast, it's trying to find, it's in basically price discovery mode. It's trying to find its place in the market. So the market doesn't fully know how to evaluate it and to value it. Combine that with the fact that Bitcoin is a 24/7, 365 global asset that can be traded. That's significantly more time than the current global markets. And I don't have the math off the top of my head, but you can do it on a piece of paper
Sure,
too. Compare
sure.
what the 9 to 4 trading hours of the traditional markets are 5 days
Right.
versus the 24/7, 365. So you get a substantial increase in the amount of trading time. Another factor, we're all
Okay.
connected to our cell phones,
We
right?
sure are.
We're plugged in now more than ever. And the media and the information, the rate that's coming at us is so fast, and it's playing with how we perceive things. When you're looking down at your phone, typically you're not looking out around you. And so you're in a suggestible state. And so
That's a
any
good
type of
point.
headline, things that come through, you can react to. And when you're reacting to something, you're reacting emotionally. And when you can react emotionally to something and immediately click a button to buy or sell, right? That can create volatility as well. So all these things are combining and adding up, plus all the stuff going on in the world, and the
Yep.
asset still being new and growing. It's only $1 trillion asset. So
Only.
yeah, and so I mean, that's small by comparison. There's over 120 trillion dollars in bonds that are negative yielding. So it's
Sure.
still very, very small relative to all the other benchmarks, all the other capital it's actually aiming to acquire. So it's got a lot of growth. So what that means is that it doesn't take a ton of money. It still takes more than lots of other cryptos, but it doesn't take a ton of money to actually move the price of Bitcoin. And so you'll get these huge drops, huge swings. But over time, if you plot this out on a graph, the volatility is actually reducing. And as the asset grows, you can predict and expect the volatility to go down. It won't go down to zero.
Yeah.
And volatility is not necessarily a bad thing with the asset. So just knowing those things that are factors in it.
Depends on when you're buying and selling.
It does, or what you're doing. Some people just trade the volatility of assets. And the
Sure.
volatility is sometimes, a lot of times, associated with the potential upside of the asset. So an asset that's not very volatile, you're not going to have very much upside, right? It's not going to move very much up and down.
Well, you
So
mentioned something interesting. You said emotional,
yes.
and I think that's where I caught myself in a very bad situation. I took a
Mhm.
loss. I bit the bullet. I lost quite a bit of money because it was an emotional loss.
Yeah.
I was on this ride of it was going from 50 to 60,000. I buy and sell, buy and sell, buy and sell until
Yep.
it didn't, and then it
Yep.
dropped, and I was like, oh my gosh, this is it. And then I emotionally sold. So would you say being emotionally stable to the volatility of the Bitcoin market is super important?
Yeah, I think you need to know your own temperament and your own predilections when you're getting involved. And sometimes you learn the hard way, like you experienced.
Oh
Um,
yeah,
right. And
I
so
felt it.
that's why your fundamentals are so important, is understanding who you are, what your goals are, and how you want to operate, and how you want to interact with this asset's key. If you know that you're prone to kind of emotional things, then protect yourself from that. Protect yourself from yourself, right? Don't do things that, or don't get involved with something that will make you feel too overwhelmed, right? Or too
Right.
stressed or too anxious with something. And if you're feeling that, you probably are overexposed and you need to
Or you just don't
reevaluate.
have enough money to invest properly, because I see the same thing out of traditional investors. I have friends that make only 30,000 a year that, well, they're not friends, but I know them, and they try trading stocks off of what's the it stock, and then there's this like penny stock. They're all,
Yep.
oh, we're going to the moon, and it's like, and these are people that probably shouldn't be investing at all. And if they are, they should be investing into just Charles Schwab or someone
Yeah,
that, putting $100 a month into Swan Bitcoin, for example. And
exactly.
so I'm trying to separate the dummies from the smart people. And a lot of people are going to reject advice. And my goal with this is why you're back on the show. I think you got, I don't know, like 75,000 people tuned into your episode. So we
Wild.
got to really plug your links a little bit better. And it was just like, we got to make sure that we're giving people the right information,
Mhm.
because everyone's talking about Bitcoin and it's
Yes.
becoming oversaturated with the news and media outlets. You get Fox saying it's the worst thing in the world. You get CNN saying the same or different. And then you see market research put out an article. That's what we're going to cover on this, is their
Yeah.
article that they put out. But at the same time, you got to realize, guys, is that there's always going, whenever there's an it factor of anything, this is no longer an it factor. How long do you say it's been trading? 10 years?
13. It was the white
This is
paper. Yeah, it was released in 2009, January
this is
3rd.
not this is not it factor anymore. This is the real deal. And
Mhm.
for me to say that about Bitcoin is tough, and I've
Yep.
had to come to terms with it. It's not going anywhere. And if it's been around for a decade and a little over a decade, it's going to be here for another decade.
Mhm.
And you said a quote that really stuck with me is, your biggest regret will be not investing in it. And
Yeah.
that's what really pushed me into making that big dump into it. And it's lost some and gained some. And I don't even give a shit about it anymore. I'm just letting it do
Yeah.
its thing. So
Well, and I think time horizons are key in knowing what the nature of the asset you're investing in. People like to
yeah,
say crypto and it's like a catch-all term, Bitcoin and all these other things, but
that's what I use. That's what
that's very,
dummies
and I
like
use that
me say.
too, because that's been
Oh,
around. That's been like the kind of marketing around it, and they've been associated, but that couldn't be further from the truth, right? There's the use cases in the crypto industry are vast, right?
that
And
makes
so
sense.
not all of them do the same things, and they're not all competing for the same market share, and they're not all trying to solve the same problem. So it's really important to understand what those problems are. And I always direct people back, understand Bitcoin first, and then
Right.
you can branch out if you want to, but you don't
To the
necessarily need to. Like if we talk about Bitcoin, there's a quote from I guess Warren Buffett, that's, if you won't hold something for 10 minutes, don't hold it for, or yeah, if you don't want to hold something for 10 minutes and don't hold it at all, or
Yep.
no, 10 years, 10 years. If you want to hold something for 10 years, don't hold it for 10 minutes, don't hold it at
One
all.
of the
And
wisest
basically,
investors in the world.
yeah. And so it's like, it's very, very hard to, when you zoom in, to be good at playing the day-to-day fluctuations, week to week, month to month, because irrational things happen in the market, wild things
Of
go
course.
on, and you could have no prediction. And if you're trying to play these small moves, this is something I didn't get to with the volatility in crypto. Crypto allows you to be leveraged 50 or 100 to 1. So there are lots of cases where there's a huge jump up or there's a huge jump down, because you have these cascading, basically cascading liquidations that happen on shorts or longs, because people are leveraging up in the system, and they're trying to play these daily movements or weekly movements. And all it takes is a piece of news to hit, like, you, and the way you can test this is just look what happened to Meta right? Their stock dropped by 25%. This is a traditional equity, right? One of the big ones. And if their stock can drop by 25% in a day, right? And they're, traditional and seemingly less risky, right? Imagine what can happen when news comes out that's either counter or pro something like Bitcoin, big news.
Elon Musk is the one that dropped the price of Bitcoin for me.
He contributed to it. There's a lot of factors that add up.
Well, me and him have issues. He was my hero until that moment.
Yep.
So, I mean, I was a big proponent of Bitcoin and I was making money and I was feeling great. And then he sent out that tweet about energy or something and it just plummeted. And I was like, I rode the wave down.
It was like one of those cat videos where there's a thing on the edge of the table and the cat just like pushes it off. You know what I'm talking about?
Yeah, absolutely.
That's exactly, because what happens is like what you get is like builds up of FUD and excitement in these markets. Because a lot of the technical analysis and stuff works only because people believe it works, only to the degree that enough people believe that it works, that people are looking at the same things in trading, because we're humans looking at this market, and it's a market catered to humans' wants and needs. So it's something to consider in these times. Like right now, people are excited. So there's a little bit more positive momentum and feelings injected into the market
for 10 years.
Well,
that's the star power
of
crypto, but that's the star power of crypto. Innovation is always met with conflict. I mean, seriously. Innovate, and that quote is so true. Innovation is always met with conflict, and the older generation is going to hate the newer generation because we're creating new stuff. I mean, people even hated on Elon Musk for creating a car company, and they're saying it's an anti-American car company. It was built in America.
Yeah,
it's the most American thing he's done. What are you talking about? The most un-American thing is going to Mars. So stop hating on Elon Musk. I still love the guy. I mean, he just lost me some money, and I do blame him if he's ever on my show. He'll never listen to this, but I get a lot of DMs, and I think I had 65 over the last week about should I invest into crypto, and I just say go talk to Dylan. So that's the reason you're on the show. It's like I'm not an expert in crypto. I've learned how to make a lot of money through traditional investing, and it works very well for me. But I've met people that are driving Ferraris now at 21 off of Bitcoin, and that pisses me off.
And I think one key thing that you mentioned, so one thing that I think you should look into, and the audience should look into, is a book called, I think, The Paradox of Choice. And it's about that explore versus exploit phenomena. Basically, when you're younger, you explore the world to basically get more experiences so you can better navigate it. But once you're older, you have less time and you savor it. You try to exploit what you already know. And so when a new technology emerges, right, the people that are involved, they're exploring, right? They're testing against everything. It's trying to figure out where it's going. But the older, more established technologies that it might compete with or displace, they're trying to exploit their markets. So they're going to put up defenses and they're going to be resistant to it, because if they adopt this new technology, right, it could change their whole dynamic. And for a larger organization or larger business,
terrifying.
They're a lot slower to adopt. And you have this struggle between entrenched powers and power structures, businesses, things like that. Oftentimes they end up failing because they can't move fast enough to adopt the new technology. And because the new technology, what it does is it lowers costs for the people that are left out of the traditional or that typical business. And so it allows those people who couldn't compete before to compete, to play a role.
It's either acquire or die at that point. And this is where you see, I think Yahoo, they acquired businesses to the point of bankruptcy. Like they were once one of the biggest companies in the world, made the dumbest acquisitions you could ever think of. I'm talking billion-dollar acquisitions of apps to shut them down for no reason. And then they sold the Verizon for $5 billion. So you're seeing companies that they're going to be very slow, or they're going to acquire the technology to stay ahead. And if they don't, they're just going to sink or swim.
Exactly. I mean, and it's really tough too, like for a company like that to win just through acquisitions as well, as like you said with Yahoo, because like you're going to try to shut out competition in the market, but the more you do that, like competition is going to find a way. The market's going to shift and move. And if you can't be a leader in the space, if you're just trying to stifle that to protect your own, it's still going to find a way. It's like, in Jurassic Park where he's like, life finds a way, it's just all, it's just always going to play out unless you lock everything down and you have complete control over a system. But we don't live in a system like that completely yet, which is a good thing.
Yeah, I think so.
So it allows for innovation. That's why a lot of companies, a lot of innovations are born here in the US. That's why China, for example, just copies what the US does, because we have an innovation machine, because we allow a little bit more of that free market competition to come into play. And rather than them doing that, they're like, well, we'll just copy and steal it and just close it off and build it in our own closed off economy, because you just did all the work for us. And so we can just take it to our market because we know it works. Right. So they do that with like Facebook, Google, all the Amazon, right? They don't allow those companies really to operate.
This is
over
why I
there.
like bringing you on, because you can just free ball for hours, man.
Yeah.
Like, I'm going to read this quote to you and you're going to hate it. I don't like it. And this is a anti-crypto guy saying, I don't like it. A global investor, Mark Morbius, on Wednesday called cryptocurrencies a religion, joining a chorus of digital coin skeptics at a time when Bitcoin and Ether are trading near all-time highs. It's not an investment, it's a religion, it's a cult.
Yeah.
I
don't fully disagree with that. I think many cryptos, and there is this religious element and religious zealotry involved with some of these things out there.
Have you seen the Dogecoin guys?
Yeah. Oh yeah. It's basically a religion. Like people build shrines of them. They have.
I was expecting a little different response. I thought the boxing gloves are about to come on, like tear this guy apart. Like,
no, he's not wrong. I think what's important though is to consider is to understand what he considers an investment and how he defines an investment, and then see if that pairs up.
Old people see an investment if there's not an intrinsic value to it. So like gold, I can own the piece of gold. Mm-hmm. Whenever I try to explain to my grandfather Bitcoin, he loses his shit.
Yeah.
Now I am trading $1 for a piece of that Bitcoin.
Yep.
Okay, there is value behind Bitcoin. Now, I don't know how to define the intrinsic value of it, and seniors will never understand this. I promise you. Don't go to your grandma's house and try to explain Bitcoin. Everyone on the show, go have a fun conversation. Well, it's going to challenge yourself too, right? It's going to make you
pushy about it. Like learn about it and educate people, but like don't be pushy. No one likes that when you're so pushy and you're like, well, if you don't believe in it, you're contributing to the downfall of civilization, which some people do. Some of the toxic Bitcoin maximalists do kind of fall in that camp, or toxic any crypto, right? If you don't agree with their point of view, they're done with it. And I've heard people talk about it, and there's a place for that in the market, right? Because it's a spectrum of actors in a market, right? So it doesn't have to be all or one. There can be and or, right? So I guess there can be and. So it doesn't have to be all one thing, especially if you can separate out the different types of cryptos and realize they're not all competing against Bitcoin.
I like that. I like that. They all have their different niche that they're going after. Isn't Bitcoin the one that uses the most energy or something? Isn't that what it came down to? And Ether is like the less energy consumption.
So that is a narrative that's playing out in the industry. Because Bitcoin uses something called proof of work. So does Ethereum. Ethereum is moving to a proof of stake system. And there's a whole debate going back of proof of work versus proof of stake and which is better for what things and what they represent. That can be a whole episode, but basically
we'll get there.
Bitcoin secures its network by it started with a computer, right? Initially, where you had to solve basically a random number. And if you solve the random number, you had to use the computing power to solve that. And that would obviously require a computer and electricity. So you're running the computer, it's using electricity to solve this number. And if you solve the number, then you get to be the one that records the block, the information of all the transactions.
Piece of the action.
Yeah, every 10 minutes, you got to record that 10-minute block onto the blockchain, and you got a Bitcoin reward.
That's crazy.
So as more computing power went to the network, Bitcoin has this interesting thing built into the protocol that's called the difficulty adjustment. So it actually adjusts, because you can imagine if you take a laptop and you mine Bitcoin back in the day, right? Well, just what if you got a faster computer? Well, then you could always win the random number, because it's a brute force algorithm.
Well, now I see these data centers, and
it's evolved to that because more and more computers went onto the network to compete. And it got more difficult to solve the problem. I think
why can't we go back in time? We should be able to go back in time and just have two M1 MacBook Pros just doing all the mining.
I know, right? That'd be pretty great.
I spoke pretty publicly. I had like 10 Bitcoins back in 2014 on the dark net. We're not going to explain why they were on there. Silk Road.
That's all right.
Shout out to the Silk Road, but and I lost them, and they were worth, I don't even know what that'd be today, like nearly $1 million or something. So
Yeah.
Yeah.
Well, I think that you bring up a good point, because that's also part of the narrative. So back to the energy, I guess, energy, and then the narrative about the dark web. So I think it's important. So energy with it, so it uses up energy. So the more computers that try to compete for it, basically the higher the hash rate, which is the computing power on the network, the more energy is required. And there was a fear that it would require so much energy that energy would be diverted away from other industries, other resources, things like that. What's happened is actually the machines have become more and more efficient by orders of magnitude. You can go look up the Bitcoin Mining Council, and it's just a coalition or like a cooperative group of different miners, and they put out a report just kind of being transparent with what their data is, just bring more openness and transparency to the industry. And what's happened is that back in 2009, renewable energy, and I worked in oil and gas, it was kind of a joke when people were like, renewables. They just weren't efficient. They weren't set up right, and they're still not that efficient, but they've gotten more and more efficient. And the cost of renewable energy has gone down substantially. So what has happened is Bitcoin miners can plug into these renewable energy systems. And now over 58% of the network, according to the Bitcoin Mining Council, over 58% of the network uses renewable energy to produce Bitcoin, making it one of the cleanest industries in the world.
That's really huge.
And that was actually part of what Elon Musk was saying. He's like, I don't want to accept Bitcoin until it's over 50% sustainable, because it was plugged into coal plants and things like this, these power systems.
All right, Elon Musk, I'm no longer mad at you.
But the energy is important. If you can dive down this rabbit hole, but the energy that it takes to support the network is actually very, very important and essential to it. It's not a bad thing, right? It's not a bad thing that it takes a lot of energy, because that means it takes a lot of energy or even more energy to take over the network, to hack the network.
I'm all about electricity and burning electricity over gas. Like fossil fuels. Like I don't understand why. I think Bitcoin is comparable to Elon Musk, what he did with Tesla, because like he said, I'm going to create the sexiest electric car in the world. He did it. It became the fastest or the number one selling car ever, or whatever. He did the impossible, right?
Yep.
And then we see Ford, they come out and they say, we're going to stop making gas-powered vehicles.
Yep.
Like, we're heading into this new generation of technology. And it goes to that point that you brought up earlier, is that there's early adopters and late adopters, and the biggest companies are the late adopters. They have no choice. That's why the Ford Lightning doesn't look like a spaceship like the Tesla does. It looks exactly like a Ford F-150. There's like literally no difference besides you plug it into your wall.
Yeah. Yeah, exactly. And so, the bigger companies are going to be slower to move in this, and they have to be, right? Because
Starbucks said they were going to do something with Bitcoin. I'm still waiting for that.
I haven't heard that. I know, maybe in El Salvador or some of these countries where it's more used as a payment mechanism.
Channel sponsor is the new Minions movie coming out next month.
Love it. That's cool.
I'm going to send him an invoice. They didn't really, but I'm sending him an invoice for saying that.
Yeah, I gave you free publicity.
Yeah, well, no one watches our YouTube channel. They just listen to the podcast. So
that's all right.
I guess YouTube hates me. Instagram hates us, but Apple loves us. They loved your episode specifically. So we got to make sure we can keep this going. Now, okay, so we got over that religion talk. I disagree with
the dark web. The religion.
The dark. Yeah, let's talk about the dark web. It started on bad foundations, and what I mean by that is, you get this guy like me that it's only $200 to buy these, and I can order stuff to my mailbox, and I'm young and dumb and full of stuff, and and I was doing it, and I had no idea what Bitcoin was. I was like, this is the weirdest thing. There's a PGP code. I have to encrypt this. Like, what is this nonsense? But I had 10 of these suckers when the site shut down. And I was like, whatever. I lost a couple $1,000.
Yeah.
Little did I know, 5 years later, like it's worth
maybe a lot more.
000. Yeah. And so it started on very bad. It was off to a bad start because people immediately associated Bitcoin with drugs.
Yep.
Am I wrong?
So that was a narrative that was run in the beginning, because it was used for that, because oftentimes innovation and learning comes from the fringes, right? And this is very important, I think, to realize and learn, so it's all goes back to the hero's journey myth. And I kind of think about this in a weird way, where like, if you have a circle and the circle is white, that represents knowing everything within the circle, right? It's everything's filled up. Outside that white circle, there is black and abyss.
Right.
That represents all the potential things that could go into that circle if that circle expands, but you don't yet know it, right? And on those fringe edges, it's kind of gray.
That's a good analogy.
And that's like you're turning what's happening when the hero's journey is basically like the hero is in the stable society that's starting to break down because it's growing old and stale. And then the hero's called to action. They have to go out into the abyss. They go out into the abyss. They face trials and tribulations, right? They have their struggles. And when they come back, right, they overcome those. And so when they come back, they're basically bringing new knowledge and new information in a way. And they're basically teaching people how they can follow that same path to venture out to where they ventured out. So they're bringing new information. So if you're living your life and you're just, and this is where I was at, I was in a traditional university going down like the traditional like consulting job route. So I was very much in that like, white circle, right? It wasn't really groundbreaking anyway. I wasn't on the fringes at all. So I was like kind of a straight edge kid. Like I ran track, so I couldn't.
Yeah, you were telling me this.
Like that.
I was the opposite. I was the fringe.
So I didn't dabble in that space, and my peers didn't dabble in that space. So I had no idea what that was. But the people that did, that were on those fringes, that were willing to kind of go out, that weren't necessarily in that like, that white circle, basically, that were able to go out, they got exposed to different stuff. And of course, there can be a cost. There are dangers when you operate at the fringes, but that is the opportunity to learn something new as well. All the opportunities out there
is always met with conflict, and there's always risks with innovation. Elon Musk, I think he got sued like 300 times last year.
Oh yeah.
I'm just saying, innovation is met with conflict, guys. And I love this analogy of the circle and the fringe, because the most successful companies operate outside of that space, outside of that white circle, then they bring it into the norm. And if it has to come from ugly beginnings, well, think about the Roman empires. We used to just slaughter people to get gold, right? Like it was kill or be killed. I mean, that's how the world worked. And it's really nothing's different. It's just there was a drug website and they created Bitcoin, and Bitcoin was the transactional method of buying it. And did I take part? YouTube, maybe. I don't know. I'm not gonna.
You knew about it. You knew about it.
I knew a lot about it. Yeah. I don't even. I think there's a grandfather clause. I think I'm good. Probably. But, I don't know.
But Bitcoin itself, it's amoral, right? It's a technology. It's a tool, right? Just like the fiat dollar, just like a gun, just like a knife, whatever it is, it's a tool, right? It's how you use the tool that that impacts, that determines whether it's good or bad or evil or whatever you want to call it. So it is amoral. So it can be used for good and it can be used for bad. So it's just up to you on how you want to use it and how you want to engage with it.
I think you'll like this part. This is why you should invest into crypto. So I did give you some credit and found good articles and maybe you disagree with some of this stuff, right? Cryptocurrencies have been described as a transformative technology that could revolutionize a number of industries.
So do I agree or disagree?
Whatever you want.
I agree. I think there are elements of it. I think there's a lot of marketing hype and scams and cash grabs and products that don't fit a market. So it's like basically having a new ecosystem boom, and you have all these small species and creatures pop up. But over time, the best ones are going to win out, right? The ones that adapt the best and have the best fit in that environment. So over time, you'll have less and less creatures, but you'll have more established ones. And
you get excited thinking about like when the dollar is gone. Like I had a thought last night of this virtual reality life, and like I take Ambien to fall asleep, so I'm always waking up with weird thoughts. And I was like, one day the dollar is gonna be nothing, like, and it's gonna be this crypto stuff, and it kind of got me excited. And maybe you're pulling me to the dark side or the light side. I don't know yet, And but I didn't mean to cut you off. It's that's that's what the movies displayed in the future. You'd have credits, right? And like since Star Wars, I mean, like Star Trek, like we're going to Mars, guys. This is like we're moving in the future. I always tell people I wish I was born 100 years from now. I want to ask you that same question. If you could be born at any time, where would you want to be born?
Oh man. Do I know what I know now?
Yes, you know what you know now.
Oh man, I might go back. I might just go back to, basically when I was born, maybe knock a few years off, but or
Yeah,
maybe a few years
but you
later, but
but you can't carry the knowledge with you, is what I'm saying.
oh wait, so I mean, if I
Yeah.
went back and like could buy Bitcoin and get it in
No, but you
2009,
you don't know anything. So you can't take it with you. You can't take your
yeah.
knowledge with you.
Okay. That's a tough
Different
one.
question. Yeah.
Yeah,
Yeah.
that changes it. That changes it because I don't necessarily think I'd be disappointed being born the same time. Like, maybe if I've thought about this, if I went back to like the 1800s or something like that, it could kind of be cool. But then
I
you have
could
to
see
deal
you
with
doing duels and riding
yeah, but you have to deal
horses.
with
I
all
could
that
see you
stuff.
doing.
You got to ride horses around. Like,
I
it's
could
nice that we have
see
cars with the air conditioning and
having duels
music and
with
stuff like
people and
that.
like pop pop pop. I could see
Yeah.
dealing with the. I could see you, man, with the cap on and
No, I mean,
uh
I'd try it out. I'd try it out. I think I wouldn't be bad at it, but like we have it pretty
pretty damn
good.
good.
We we
You'd be like Nikola Tesla. You'd be the Nikola Tesla of back then. I
yeah.
always say I wish I was born 100 years in the future just because of space exploration.
Yeah.
I would love to die on Mars. If I had a ticket today and Elon said, "Dude, it's you," I applied. They laughed at me, so I applied to die on Mars, and I wanted to be a part of Mars One, and I would do it. I would do it. I would
Yeah.
immediately today leave Earth and go die on Mars. I would totally do it. Like, I just wish I could be born 100 years from now because technology is the most exciting thing in the world to me. And to be a part of, we're in a very interesting part, but we grew up in it. So, like,
Yeah.
I was a part of the dial up stage. Now we have kids that are born with iPhones. The next generation is going to be born with the knowledge of us on Mars, so it's not going to be exciting to them, which
Yeah.
kind of sucks. And that's where it's always like, well, back in my day, the grandparent story, we had these kind of phones that you had to push and plug in, and it's like that was the standard, and they got introduced to technology. But I don't know, I'd say 20 or 100 years in the future for me.
I mean, I
But
think that's a good point. I think you bring up something that's like, I guess I can relate in the wanting to be in an age where there is a sense of adventure and exploration. Like you're discovering something new. I think,
outside of the
yeah,
Earth is my
yeah.
goal.
And I think like the current age has been the technological innovation. So you're discovering how like to optimize communication methods and all this kind of stuff,
Oh yeah,
data and stuff. So it's very like it's still within the earth.
the
Before
iPhone.
yeah,
Think
before the
about this thing.
technology age and Zoom, before the technology age, like you
Yeah,
actually had to go
what we're
out
doing.
and like, well, hey, what's west of us, right? What's out there? What's over those mountains? Like you had to go discover
Yeah.
new physical land. And I think like what you're saying is like in 100 years in the future, there'll be this adventure where it's the technology combined with the then discovery of what more is out there,
Here's
right? With
my
that physical
problem
exploration.
with our technology age today is this phone right here has all the information to get a bachelor's or a master's degree in anything I want to get, but kids are instead posting TikTok videos, and
Yeah.
it's pissing me the hell off. And it's like I listen to about 150 books a year, and that's what I do with my iPhone, and I can start a business with just this. Like, how crazy is that? And people
Yeah.
are misutilizing it, and they're just spending time on YouTube watching dumb videos, TikTok, and all that stuff. But we have the power to do anything we want in our pocket. And I think it's making us dumber. I think our generation before us, not the millennials, what are they called? What's the 2000s babies? Are you
Gen X.
2000s baby?
Oh, so there's
You're
Gen
not a
Z.
two. What
No,
are
no,
you? What are you?
I'm in the 90s.
Okay, good. So we're
Yeah.
cool. All right. I don't want to talk crap on you. Yeah. So the generation in the 2000s, I think they're getting stupider. I think they're
Yeah.
getting more intelligent. I think they're not utilizing the power that they have in their pockets.
I think
And I
it's
think
different.
because we saw the technology come, we saw like, oh my gosh, I have everything I want to know is on here.
Yeah.
I can go to Google Chrome or Safari and find anything I want to know. Hey Siri, find me this, right? Oh, I hope it doesn't work right now. It shut off the Zoom call. It's done that a
Oh,
couple times
she's
on.
always listening.
Yeah, and she can. She's my girlfriend, so I say goodnight, babe, and she says goodnight, John. So,
Well, there's a saying.
but
There's a saying in Bitcoin. It's like fix the money, fix the world. And
ooh,
I think something that Bitcoin doesn't fix everything, but I think the
ooh,
concept of
fix the money,
and something
fix
we're
the
seeing
world.
play out if you pay attention. And I didn't know about this stuff. I wish I would have known about it earlier because it's impacting the majority of people. Like if you're wealthy and you hold assets, you've been fine.
Yep.
You've played the game. But the fiat money, where everything's based off, that's like the base layer money. It's not it's corrupted, right? Some
Okay,
group of
you gotta define fiat money because
so fiat
I've
money
had
is like,
about 5 people reach out and ask about you
what's
because you said it on the last show.
okay.
And why are they guys? You have Dylan here. Like, go follow his ass and ask him
Yeah,
directly.
at Dylan M. Bradley.
Thank you. I don't know why it's
Yeah.
not showing on this.
But so basically, and that's actually a good thing they're asking about this, because I didn't know what fiat was. I didn't ever think about it 2 years ago. It's basically like money by decree. It's just
Okay.
paper money that used to be tied to like a value of gold, but it was easier to move paper around. So they used paper and said, hey, we have like a ton of gold back here. This paper represents that. Then they started printing more paper and saying, now, instead of one note equaling, a tenth of a ton of gold equals 100th of a ton. And then they kept doing that and sending the paper out, because paper is easy to transfer back and forth. But basically the government says you have to use it. You have to use it as a medium of exchange. You have to pay your taxes in it.
And crypto challenging that.
And the thing with fiat money is the way it was set up, it was useful when it was created, because imagine having to pay for everything in gold. That just wasn't practical. And that people tried that for years, but there's all these pitfalls. And so it's very good to study the history of money. Check out the Bitcoin Standard by Saifedean Ammous. It's a really good book. He breaks it down, but it's just good to understand the history of money and like why Bitcoin. But anyways, fiat money, the government, basically a group of guys and girls, whatever, like a group basically decides how much money they want to print each year. And they are like, so you have people, a small group of people, and they have to, respond, and they have to politicians and all that kind of stuff. But you have this small group of people that basically controls how that tries to influence the whole global economy. And
you know what happens when they print more money though? It's like whatever you have in your savings account gets depleted.
Goes down. And you're losing 1 to 2% a month.
I tell people, like, your money is not safe in a savings account.
Yeah.
It's got to be working 24/7.
Now you could have like 3 to 6 months of like, cash on hand.
Sure. Whatever.
Yeah,
I get that. I get that.
Yeah.
I get that.
Yeah. But you don't want to save, like don't have
I have
large
a
sums of
friend
money
that
in your
has
savings
$1 million in his savings account.
He's lost $400,000 over the past 2 years, roughly, in purchasing power.
Think about that. Like, for just 1 second, that statement Dylan just said, guys, investing is not, that's what the banks want you to think. They absolutely do, because they're making money as it's in there. And that money that you put in there is being used to cover other people's expenses.
Yep.
It's not your money at that point. Technically it is, but
when you find out real quickly when you try to buy something that the bank doesn't agree with. Crypto is one of those things. I had a client that they literally wanted to buy a ticket to this event. They know the founders of the event. They wanted to buy a ticket because it had Bitcoin in the name of the ticket. The bank wouldn't let them process that transaction. They wouldn't let them spend their money.
So I got kicked off of Coinbase. My bank won't let me trade on Coinbase.
So
and Coinbase told me I can never do any transactions on their account anymore either, because of my bank demanding that I stop.
Wow. Yeah.
Yeah.
Which is
that was just a couple days ago.
You find out real quick that your bank is not on your side; they're on their side, and
of course.
Yeah,
of course.
And so you realize you don't have control of your money, especially if it's in fiat, right? Then the government prints more, which they printed 40% of all money in existence over the past like 2 or 3 years. Inflation's at all-time highs. The stated number is 7%, but it's 2 to 3 times higher at least. I saw an article
the other $5 a gallon, guys.
Yeah, and I saw another article saying houses are going to go up 16% in the next year because money is rushing into these scarce, desirable assets. It's monetizing those assets because in a high inflationary environment, your dollar is going to be worth less tomorrow. It's going to be worth less the next day. So the rational person, even if you don't fully know, you're like, I need to spend this. I need to put this somewhere else because I'm not going to be able to get as much tomorrow or the next day. That's a problem. So the people that are smart that have excess.
What's the answer to that? I mean, that's a big statement, what you just said.
Well, so the people that have excess, what they do, the traditional game is because they know the value of their dollar. And so going down over time, they put it into things, or at least their investable dollars into things that will not go down like that. They'll go up. Yeah.
That's why real estate, we have this bubble in Utah right now. And basically people from California, tech startup entrepreneurs are buying all the houses in Utah sight unseen. They're not even coming out.
Yep. Because it's an asset. And they know if everyone else is doing that, there's a limited supply. The speed at which they can make houses compared to the speed at which they can put money into the houses will cause an increase in prices just by that difference.
Yeah, I got 3x for my house for 2 years.
Yep. But the problem is, a problem that is happening is that And this is, I talked about this a little bit in the other podcast we did, but
Maybe.
you have the fiat system, the system that
Yep.
we've all kind of grown and gotten used to, the things we think are normal.
Yep.
Then you have the Bitcoin system. The Bitcoin is an escape valve. It's an alternative system. The way it operates is completely different. There's only 21 million Bitcoin. You can't make more of it. Right. So it's a fixed supply. So the dynamics, it's like the dynamics of that will be different. It's like if you've seen Interstellar, right? Or any movie where like someone goes to another planet. It's like the rules governing that planet or universe are more so universe, actually. The rules governing an alternate universe aren't the same as the rules here. Right. So the Bitcoin universe has different rules. And so the way things will evolve, businesses, the way people operate in that will be different. So when you know that, you have to start questioning what's happening in this fiat world, right? You have to start seeing basically seeing the matrix, seeing what's around you, and then see how Bitcoin solves some of those problems, right? And that's kind of one of the reasons why it's important to have some exposure to it, because it's like an insurance policy against the continual printing of money and the collapse of the fiat. And the fiat
system, going to collapse.
There's going to be a collapse because you have a system that's predicated on infinite growth with finite resources. So how are you supposed to have infinite growth with finite resources? Pretty soon, you're going to be getting paid $1 million a year, and you'll still be in poverty. Yeah, because the value of the dollar has been decreased that much. House will be worth $1 trillion. But
would you say it's comparable to gold? Because gold has a cap limit. We can't make more gold.
It's like digital gold, but better. So so gold. I think gold's inflation rate is like 1.5 to 3% per year. That's one of the reasons why gold was adopted as like the sound money. That's where sound money came from. Is like the sound of a coin. That was gold. That was real. Made the right sound. So gold was adopted because it was the hardest money to corrupt. If you look at the history of money, anytime a form of money that was easily corruptible was used, the economies immediately collapsed. So glass beads, for example, were one that was used by, I forget who it was, but a tribe back in the day used glass beads because glass was rare. The beads took a lot of work to make. Well, when the Europeans came over from basically a different world with different levels of technology, and they're like, oh, you're trading with glass beads, right? But we have a bunch of glass beads, take our glass beads. And initially
it's memorizing how much history you know. Was that your major?
I did study history, but it was a minor. It was okay. I didn't get the full minor. I had like one class away.
Apparently you took a lot out of it if you know all this stuff, man. I mean,
they talk a lot about in the Bitcoin standard.
Yeah. So you were talking about the safety of it. Here's another key takeaway of why you should invest. It's because it cannot be printed or seized. Cryptocurrencies may also provide a safe store of value. So that's huge because my bank account gets smaller every time we print more money. We can't do that with cryptocurrencies.
Not all of them. So I would say focus on Bitcoin specifically to what you just said there, and then if you're curious about other ones, see how that applies, because some of them, right? Ethereum, for example, Ethereum is trying to be different things. Bitcoin has kind of claimed the store value position in the market. There's not another competitor that can really compete with it. If you look over the time frame and everything, like you'll get ones that go up in value more over a year, but that's not necessarily representative of being a good store of value, right?
Of course.
Ethereum, for example, it wants to be like this world computer, and they built into their protocol an unlimited printing of Ethereum. So the supply on Ethereum isn't fixed. It will constantly be printed. Part of that is how it operates, because it has, they have a burning mechanism to where if every transaction, a small portion of that transaction is sent to be burned, basically taken out of the supply. To kind of, their goal is to give it a deflationary supply based upon how much people use it. But it's different. And
I'll tell you, when I buy with crypto, I feel really safe because I learned it has to process a bunch of different. It goes through a process before the transaction is complete. And for some reason, I'm a top secure guy. I love that. It just feels really good that it has to go through all these secure processes, and that's mining, right? Someone's solving that equation for me.
Mining, proof of stake is the other one, and so one thing, if you're talking about payments in crypto, the benefit of that is there aren't chargebacks. It's a send only. So if I sent you $500, like I can't
Yeah,
go to
go
my
for
bank and be like, if I send it to your wallet, I can't go to my bank and be like, hey, can you reverse this charge because I don't like John anymore? Like,
Yeah.
because
Yeah. Good
some
point.
people will literally do that to your business, not because you delivered a bad product, but they're like, I don't
Oh,
like
I
what they
get it all
said.
the time. I get it all the time. I get
Yeah.
reverse charges all the time.
And you
You
can't
can't
do
do.
that with crypto.
Well, I'll
It's
tell you what. I've sent crypto to wrong addresses plenty of times.
and it's gone. It's gone.
Yeah, no, I mean thousands of dollars. I think
Yep.
I got scammed on this one thing for one thing I will not disclose, and it was I sent it and like it was a mirrored site, just completely, just it's not my money anymore. It's gone.
Nope.
So be careful. I think it's the most secure platform to exchange any type of value, and you can put value on cryptocurrencies. And I'm sick of having these arguments with old people saying that you can't.
Yeah. I mean, because they don't necessarily understand the value that it brings to the table.
But most people don't.
No, and that's a good thing. It's a good
That's
thing
a
because you're
great thing
early.
for people like you
Because you're
and people that are listening to this podcast and
exactly.
having the luxury to speak or listen to you, because I'm telling you, you had our most listened to podcast and the most return listened to. So people were going through and re-listening to it. So that tells us like, okay, we got to start shifting our conversations more into this, because all the traditional investing people don't give a shit about anymore.
Yeah, and well, because I mean, Bitcoin has returned 130 to 170% year over
I
year
can
for the
teach
past 10
50
years.
guys how to be rich.
Oh, buy Bitcoin, and
by not buying Bitcoin is how I can teach them how to be rich. Is what I'm saying. Like okay. I can take 50 guys. I have a Mercedes-Benz rule. I think I've told you this: investment, fund money, and then living expenses. And if you just follow that every week, you'll eventually become rich. And Bitcoin, you'll get there a lot faster. There's no doubt about it. I've seen it, or you lose all your money like me and panic sell. But you know what really pissed me off is watching it go up to almost 100,000 after that.
69.
Yeah, come on, man.
Yeah.
So I got some key takeaways. Let's go ahead and wrap this up. I do have one. So potential or speculation is how investors see this. I think it's a potential. I think it's still a little bit speculation from big time investors like Schwab and Merrill Lynch. I think they're going to they're always going to call it a speculation until their people say, hey, I'm going to invest into Bitcoin instead of you guys. And then we're going to see a big shift in the way traditional investing works. It's happening right now.
Yep.
I think I told you in the last episode, I got an email from my investment account saying we're now doing crypto. Yep. And I was like, whoa. It like took me back a second. It's like, well, now I can't hate on it anymore. And if I'm a big proponent of not doing your own investing. I would rather have the guys on Wall Street make the money for me. And I've been very successful at that. And I buy houses and stuff like that. But like now they're adding crypto, and it's like I've thrown back a little bit. It's like this means that big ass companies are $1 billion organizations are starting to invest in it.
You bring up a good point. Is don't try to do something that you're not comfortable with. Like find someone, let's say you make a mistake, right? Find someone who knows what they're doing and you can trust and go to them, especially in crypto, right? That's why I'm helping people with the consulting element, because
there you go.
I tell this story about this guy who his buddy told him, hey, put $15,000 or put money into this asset, this one crypto coin like a year ago. And he did it. He put 15 grand in. That crypto asset just so happened to do really well in this bull market. It was worth over
Doge.
No, it wasn't Doge. I'm not going to name it.
I made money on Doge,
but it could be Doge, and that's all right. Like it's okay. That's like fun money, speculating money for some things. But it turned into over 700 grand. At that point in time, it's like, okay, like that's not necessarily speculating money anymore. You gotta like handle that, right? Because you don't want to lose 700 grand just like that, unless you're like a multi-millionaire or a billionaire. It doesn't matter.
There was a comparable example is Kodak, when Donald Trump said, I'm not a proponent of him, and I'm very outspoken about what I believe is right, and I do not like the guy. But he said that they were going to make vaccines out of Kodak, and Kodak stock went up 100,000% or something crazy overnight. And I kept getting texts from people saying, buy it, buy Kodak, buy Kodak, buy Kodak. And I said, no, why would I buy this dollar stock? Go F yourself. And then it shot up to like $800 a share the next day.
Yeah.
And like everyone that invested got feds at their door. And it was just like did you hear about that? The Kodak
I didn't
explosion?
hear about that
Go
one.
go Google it after it, because it was
Yeah.
just because of one press release.
Yeah.
And I should have just dumped all that cash into it, because it was like if you could have invested in Bitcoin 10 years ago, it was like that overnight.
Yeah.
It was the craziest trade ever
And that's
recorded in history.
that's like hype speculating trade. Like that's like,
yeah, it's a risk.
I talk about this in other things, like know your investing buckets, right? Your savings, you're investing, right? You're trading, and you're speculating. And then money that you're investing into your business, right?
Okay,
Creating.
So Mark Wahlberg, not Wahlberg, Mark Cuban. I don't know if you know him. He's a very, very poor guy, lives in a trailer park. So
what a loser.
What a loser on a reality TV show. Definitely
and his basketball team sucks.
They're terrible, you know. Wait, I think they're going to the championship or something.
Oh man,
I don't follow basketball. I'm a football guy, but so he said only invest 5% if you're going to do crypto. Now, I really took that to heart, and I believe in what he said, but I've really, as I've developed and learned more about the system in place and getting information from people like you, I'm changing my position into 20% instead of 5%. And that's just because it's not going anywhere. And you said it was like 150% year-over-year growth.
Yep.
That's
130, 170. Yeah, we're in that range.
That's insane.
Who says the numbers? Yeah.
That's insane.
That's just Bitcoin. Like that's just Bitcoin.
Yeah. So you
got
to
tap this potential.
I wish you would just publish like your trades, like just so I could, the moment you do it, I can do it too. Like, I mean,
but that's not. I wish I was good enough. That's not me. That's not like my skill set though. Like I'm not a trader, right? Yeah. So I'll buy and sell it. I learn about this stuff. But so it's important to know like who, like just for you guys for reference, like I don't do like the daily trades and all that, like trading and all
that's
that. That's
good. I tell people not to. Because I think you're going to lose more than you win.
You will lose more. It'll take time. If you want to be really good at it, train, and it'll take time to be good. Like find someone that's really good.
It'll take you 5 years to do it. I'm telling you, these stock traders are geniuses at what they do. Why?
A lot of them are educated. Because I was going down a trading route when I graduated school, university. I was looking to do crude oil trading, so options on crude or like natural gas or electricity.
Interesting.
So for some of the bigger trading shops there down in Texas, and they train you, right? There's systems in place, and they put you through like rigorous training, and like you get to see different things, and they bring you up through the ranks, and then
that's fun.
Yeah. So like there's a lot of money invested into traders. And so a lot of these people that worked at those companies are coming to the market and trading against you. So if you think that you're just going to watch a couple YouTube tutorials and
become a stock trader,
right? It may work in your favor in the short term, but over the long term, like those guys will eat your lunch. And they are.
I'll be honest. I've been a part of some of these Facebook groups where they're all like, "Oh, we're going to the moon with this one," and it's some penny stock of gold or whatever. And I lost more than I won, and I had enough of it, and I decided I'm not a trader. Yep. And they play against you. What do you think they're doing? Of course they're going to play against you. Mm-hmm. That's why I keep my money with Charles Schwab. They get a commission when I make money. I mean that's incentive. I like that. I like people that are incentivized to make money by making me money.
And they have risk parameters in place and teams that look at how much risk is being taken and what investments. And they have whole teams that are backing up their positions. So it's not just one person. And especially in crypto, some of the volatility comes from the size of some of these assets. Some of these assets that people are talking about on YouTube, like they're only like $10 million, $20 million. And if they're talking about it on YouTube and they're talking, like telling you to get into it, they're probably already into it and want to maintain their position or like cash out. So
I have a guy who owns his wife is an OnlyFans model. I don't talk to who I'm talking about. I think you were in the group chat. We don't talk anymore. Remember Alex?
No.
He's the big buff guy.
Okay. Yeah.
Okay. So we don't talk anymore. And his wife makes like $400,000 a month on OnlyFans. And he is just trying to, I think he's panicking. I think the whole empire is falling apart on him because OnlyFans almost got canceled. They were going to say we're not going to allow nudity, and the point
is she the sugar mama?
Yeah, big time.
Okay.
and he denies that allegation. But and they're spending their money like they just won the lottery, and
Mhm.
it's gonna run out. And I hope he watches this. He unfollowed me because he didn't like what I had to say, and
It
I told him
happens.
the truth. You look at 80% of the basketball players, they're broke after
Yep.
5 years. And whenever there's new money and fast money, guys don't know how to maintain that growth. And I've personally sold a company and spent it on bees and hoes and and had my fun. And so I've experienced it on both ends, and that's where having a coach, I think, is so important. I want to tie
Yeah.
this back into what your offer is. And
Yeah.
Dylan's on the show because you're the only person I've talked to that knows their shit. There is a million gurus out there, or self-proclaimed, self-proclaimed gurus, and they're not, guys. You always see the Instagram ads. Oh, investment, I'll make you rich
Mhm.
tomorrow. Now they rented that Ferrari, or it's their dad's. I promise you.
Yeah.
And so uh, how do they find you? Can you spell out your Instagram handle?
Yeah.
It'll also be listed under the channel notes, of course.
Yeah. So it's Dylan M. Bradley. So Dylan M as in Mark, and then Bradley, Bradley.
Okay, so I have 30,000 invites, or not invites, requests for my personal account, and I'm
Yeah.
having a problem with that because there's a lot of people that I could probably get verified off of it, but they're not people I want to connect with on my personal account. And
That's fine.
unfortunately, I was on a popular show and they showed my personal account and it sucks. So it's like I'm tempted to have that 5 minutes of fame, but at the same time, it's like these are my friends and family. And
Yeah.
John saved his dog. Wait, I just did it again.
Well, it's your show. It's your show, so you can talk.
Oh, we can find you. So what I'm gonna do is let's defer people. Do you have a course that you sell?
Um, so I have
Let's
one
talk
that's just
about
like
that.
Crypto 101. It's just the foundation. So it's like if you've ever said, "Hey, I want to learn more about crypto, but I don't know where to start," I
What are
recommend
you
starting
charging?
there. It's like $100.
That's it?
Yeah, yeah. I make it very accessible for that one because it's all digital content. So there's membership sites and it's all the things I wish I knew starting out. And I tell you all the platforms I recommend signing up for and going to in case, like what John said, that Coinbase says, "Hey, you can't buy here." You have another platform available. So it's very important to do that, and you learn about the ecosystem that way. So it's one of the best ways to I recommend getting started is just like getting started and doing the
Okay.
things. And I show you which ones are legit platforms. $100, and
So
then
when people ask me, they talk about you a lot in my DMs. So I'm just gonna defer them back to that course for you.
yeah,
And because I mean, guys, why would you put money in something you know nothing about?
yeah, spend the time
They
educating yourself. That's the
this
most important investment when you're starting out. Just take a second, take a breather, and just learn, and then start doing.
when I started my first company, all I could do was learn the hard way. I went out there with all this ambition. Oh, it's the next big idea. Come to find out it wasn't. It took a lot of work, and I learned by failing over and over and over and over again. It took me 4 years. So it's like
Yeah,
4 years of suffering to make a couple $1,000,000. I look back and I'm like, I don't think I'd do it again. I really don't think I would. And now I'm in a position where I get paid to talk to people. So it's a way better position to be in. And
yeah,
but guys, you got to do your research if you're going to get into crypto. I'm not going to say don't anymore based off of Dylan's knowledge and his expertise. I put a lot of money into it based off of his last show, and just do your research first. Go. $100 could save you $100,000. In my
mhm,
case, $250,000.
yeah.
That's a serious statement. So
Hi, my name is John. I'm the host of the show. If you haven't done so already, go ahead and push that subscribe button, and I might just give my dog a treat. Or don't and neglect the poor puppy. Good boy.